Thank you very much for that. EMS stands for Electronic Manufacturing Companies like Dixon, Kaynes. They're all surging on the back of their Q4 earnings. Dixon came out yesterday, but overnight we had Kaynes Technology reporting numbers and very strong numbers. The stock is up close to about 20% now. Upasana joins in with the key highlights and how the valuations stack up for this entire pack.
It was a mixed quarter for majority of the EMS players. Starting with Dixon Tech, it reported a slightly below estimate numbers, but the growth commentary stands strong. The revenue was up 52% on a YoY basis, majorly led by mobile segment, which saw a growth of 119% on a YoY basis. Coming to margins, the margins were down about 119 basis points at 3.90%, which was majorly due to share of low margin mobile and EMS segment, which increased from 46% to 66%, impacting the overall margins. Now, one of the most important con call highlight is the company's announcement of potential of signing up one more global mobile client and backward integration of almost $300 million into mobile display manufacturing. Next up is Kaynes Technology. The company reported a strong set of numbers. Revenue up 75% on YoY basis. EBITDA margin stood at 14.9%, which was highest in FY24. And company has also given a guidance to achieve 60% revenue growth in FY25 and also aiming to increase margins more than 100 basis points in FY25. The order book stands healthy and strong at 4,115 crores with an uptick of 9% sequentially. And mind you that the Kaynes is the only EMS player to foray into outsourced semiconductor assembly and testing business. And lastly, Syrma SGS. The performance was below the street estimates, revenue up 67%, and the strong revenue growth was mainly led by healthcare and consumer segment. EBITDA margins were down 210 basis points at 7.2%. This was mainly because of the unfavorable business mix. That is the higher share of low margin consumer business. Now, company has given a guidance that it is confident of maintaining 40% revenue growth going ahead. Now, looking at the valuation picture at a glance, Dixon Tech is the most expensive, standing at 80 times FY25 PE and FY26 at 60 times. Next is Kaynes Tech at 53.2 times FY25 and 36.6 times FY26. And lastly, Syrma stands at 28.9 times FY25 and 22.3 times FY26.
All right, Upasana, thank you very much. That's very helpful data and comparison over there. Let's take the question.